China launches policy blitz to aid economy ahead of trade talks. China's central bank has announced a raft of stimulus measures in stepped-up efforts to shield the world's second-largest economy, which is caught in a damaging trade war with the United States. The People's Bank of China on Wednesday cut a key interest rate and lowered the amount of cash lenders must hold in reserve. Just hours after Beijing confirmed it would hold face-to-face talks with U.S. officials this weekend in Switzerland. The trade talks are the first since Donald Trump imposed sweeping tariffs on Chinese goods. The bank cut the 7-day reverse repurchase rate by 10 basis points to 1.4% and said it would reduce the reserve requirement ratio by 50 basis points, releasing about 1 trillion yuan into the banking system. Given current conditions, we believe it is necessary to strengthen counter-cyclical adjustments, People's Bank of China Governor Pan Gongsheng told a briefing in Beijing. The latest steps are aimed at lowering borrowing costs and show that policymakers understand the need to quickly support the world's second-largest economy as the trade war starts to bite into growth prospects. These moves reflect policymakers' growing urgency to stabilize growth as external headwinds intensify, said Lin Song, chief economist for Greater China at ING. The timing ahead of trade talks appears carefully calibrated to avoid the impression of capitulating under pressure. The bank also introduced a 500 billion yuan re-lending facility aimed at boosting consumption and support for elderly care, and a 300 billion yuan expansion of its technology re-lending fund. Funds for agriculture and small businesses will also be increased. Pan said the People's Bank of China would maintain a moderately loose monetary policy stance and ensure low funding costs, noting that the reserve requirement ratio cut would help stabilize banks' liabilities and improve liquidity. At the same briefing on Wednesday, officials from China's top financial regulators pledged additional measures to support the property sector and private enterprises. Chinese stocks rose as investors cheer the easing steps and the icebreaker trade talks. The moves come as Beijing faces mounting economic challenges, including fears of a sharp downturn in exports, which contributed 40% of China's GDP growth in the first quarter. Analysts warn that without a stronger stimulus, China could struggle to hit its 5% annual growth target. U.S. Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer are set to meet senior Chinese officials in Geneva this weekend. Vice Premier He Lifeng, China's top economic policymaker, is expected to lead the delegation. The meeting is the first tentative, formal first step towards tackling the trade war that has led to Washington imposing a tariff rate of 145% on imports from China and Beijing slapping a retaliatory tariff of 125% on American goods. Economic security is national security, and President Donald J. Trump is leading the way both at home and abroad for a stronger, more prosperous America, Bessent said in a statement, announcing the talks. I look forward to productive talks as we work towards rebalancing the international economic system towards better serving the interests of the United States. The tit-for-tat trade war has already affected the flow of goods across the Pacific and threatens to drastically reduce all commerce between the world's two biggest economies. It has also roiled financial markets, lowered global growth prospects, and raised fears of a U.S. recession. Washington and Beijing had been caught in a standoff, although China recently said it remained open to dialogue aimed at resolving the trade war. Trump has wanted to talk directly to his counterpart, President Xi Jinping, but China has made it clear it will not hold a leader-level call to start negotiations. Recent data shows both economies are beginning to show the strain of the disrupted trade flows amid wider uncertainty about investment, inflation, and factory output. China's factory activity contracted at the fastest speed in 16 months, and services activity expanded at the slowest pace in 7 months in April. The question now is whether policymakers will be able to boost consumption fast enough to make up for an expected loss of demand for exports.